We're on the cusp of a pivotal battle in the return to work war between employers and employees. And this one could be very divisive. You see, several major companies have set hard and fast September deadlines for employees to return to the office. And this time, they're serious. It's not like the wishy-washy guidance or the false starts we've all experienced over the past 2 years of COVID. Take our parent company, Comcast, for example. Comcast reports it's expecting 3 days a week minimum starting September the 12th. And you don't get to choose the days. At Comcast, it's Tuesday, Wednesday, and Thursdays in the office, period. And then there's Apple. It's mandating a minimum 3 days for Bay Area workers starting September the 5th. According to a memo the CEO Tim Cook sent, workers need to be in the office Thursdays and Tuesdays, and that third day is negotiable. Some companies report they need people back to restore culture, and they want specific days designated. Otherwise, there's no way to sync up everybody. They also argue in-person collaboration is critical for both the company's success and for the employee growth. But of course, not all employees see it that way. In fact, there's a rebellion brewing at Apple. A group of staffers is protesting. They have a petition asking the company to back off their return-to-work mandate. Their argument, for the past 2+ years, Apple's formerly office-based employees have performed exceptional work, flexibly, both inside and outside traditional office environments. They also list financial considerations and being happier and more productive. Apple employees want to be the ones to decide themselves, along with their managers, when and how often they should come in. And here's something that's no doubt in the back of every CEO's mind. According to a survey from Future Forum, 70% of employees are open to looking for a new job if they're not happy with the flexibility from their current employer. Peter Karpeles is a professor of management at the University of Pennsylvania's Wharton School. He's the author of the book, The Future of the Office. Peter, thanks so much. This is quite a standoff here. Both sides seem to have valid arguments. Which can afford not to blink?
Well, the employers are going to win this because they almost always win these things. And the simple reason is if you're an employee, you've only got one employer. And if you lose it, you're in big trouble. If you're an employer, you've got lots of employees. And unless they all walk out, you can probably get by.
You know, some interesting timing, really. Recession fears, talks of layoffs, inflation. Is part of this the employer trying to regain that upper hand that they seem to have lost a little bit over the workforce during the pandemic at a time when people may be concerned about money?
Yeah, I think there's something to that. I think many of them would have brought people back sooner, except the concerns about the pandemic and infection were still raging, and concerns about vaccine and all those other sorts of things. So those seem to have settled down. And I think it probably is the case that most of them know job market is not quite as tight as it was even a few weeks ago, and people are probably not going to find it so easy to go someplace else.
You know, we've heard now the details of a British law firm that's announced its employees can work from home full-time, no problem, but they have to take a 20% pay cut. Would that fly in America?
Well, you know, a lot of the Silicon Valley firms have done that. They've said that if you want to work remotely, you have to work and be paid the rate where you live, or paid the rate that prevails of cost of living. And effectively, they're saying a 20% wage cut, too. I don't know how many people are going to buy that, frankly, and I don't know in Silicon Valley how many companies really wanted people to work remotely and whether this is just a way of trying to dissuade them from doing it. So I don't think many people will take that.
The battle's on. It'll be fun to watch. Peter Capelli, thanks very much. Shepard Smith here. Thanks for watching CNBC on YouTube.